Very good afternoon to one and all. On behalf of SRCIC, welcome back to the afternoon session. Now let's all welcome with warmth in our hearts and with big round of applause our CA Vivek Krishna Govind on stage, please. Thank you so much, sir, for being with us. On behalf of SRCIC, it's my great advantage to take you through the profile of our CA Vivek Krishna Govind. He's a senior partner for a well-reputed firm for more than 20 years of experience in various areas of audit, taxation, and management consultancy. He's a qualified CA final exam with the ICA award for the highest marks from Kerala. He also qualified the Certified Information Systems Auditor, examination conducted by ISCA USA. He served as the chairman of the Ernakulam branch of the Institute of Chartered Accountants of India in 2010 and 11, during which year the branch was awarded All India Best Branch Award. He held the position of the President of Kerala Management Association in 2017 and 18. He served as Chairman of Young Indians, a sister organization of Confederation of Indian Industry, for 2015 and 16. He served as Chairman of SICASA of ICA in 2007 and 8, and also 2009 and 10. He served as the Vice President of the Kerala chapter of the Information Systems Audit and Control Association. He served as visiting faculty and associated with various premier management schools in Kerala. So, with this brief introduction, I may request our CA Vivek Krishna Govind to take over, please. Thank you all.
Thank you very much for the warm introduction. Good afternoon, ladies and gentlemen. At the outset, let me convey my heartfelt gratitude to all the organizers and SARC for giving me a platform and an opportunity to be back in this wonderful hall. It's been 3-4 years since I last spoke here, and it's always a very, very special feeling to come here and stand in this. This so much of history filled in this hallowed halls of SARC, and I'm sure it's a great privilege and honor for each one of us in profession or in industry to just be a part of any activity that happens here, and I deem it a great privilege that I'm here today. Extremely important topics that we have today over the next 2 days, the deliberations, and it's a great initiative from ICA and from SARC to. Am I audible at the back? I'm good. To organize an initiative like this, wherein we run through or probably have a more detailed discussion on aspects which are very, very critical to our profession, but on which sometimes we tend to not really refresh ourselves on some of these areas. So the newer areas which keep coming up, we are constantly updating ourselves. We are ensuring that all the latest amendments that come in GST and in income tax and the various laws of the Companies Amendment Act, etc. As and when it comes, we are immediately ensuring that we stay updated, because a lot of queries are coming from clients and there are a lot of issues which we face when we do our audits. But the backbone of the audit that we do is our auditing standards, and somewhere I think most of us tend to take it for granted. We have learned as students at different points in time when these standards were called in different names. Over the last, I qualified in 98, and in 20 years I've seen the nomenclature change 3-4 times. So we are very eminent seniors here, so probably they would have seen more of changes in the nomenclature. And there were no written standards initially, and it came into being at one point, and thereafter a lot of changes have happened, and a lot of changes continue to happen, because we live in extremely challenging times. Audit profession, as all of us know, going through very, very what it was 10 years ago to where it is today. I think life is very, very difficult for all of us today, and which is why auditing standards and the compliance of auditing standards is so important. We would always take that extra effort to ensure that we comply with the accounting standards, but auditing standards were something which is like, it's okay, we'll deal with it when it gets there. It's all there. We have done the audit and all that, and we know what auditing is, and we've done everything, but somewhere whether we've complied with the auditing standards, whether we've documented the compliance of the auditing standards is, I'm sure, been a very weak area for all of us who are in SME practice. I don't know if there are any of you from the big four here. Probably the level of documentation is a little more, more refined and more system based, etc. in some of the larger firms. But most of us who are from the SME space, our intent and our objective is always to do the best possible job, ensure that we audit in depth and with skepticism and all of that, but somewhere we don't ensure that our files speak for what we do. So some of the very, very critical aspects are sometimes, when someone else comes and takes a look at it, somehow our files don't speak for the quality of work we do, or the amount of discussion and amount of interaction that happens and the amount of time that all of us and our teams at different levels of hierarchy, we invest a lot of time in conducting a really good audit, but how much of that is really there in our working papers, or if an external person comes and has a look at our documents and has a look at what we've done, including, it needn't necessarily be from ICAI or anything, but today we have so many different agencies who are wanting to have a look at our files. NFRA is the latest. We'll have to see how those proceedings go. But even otherwise, there have been instances where the economic offences wing wants to review files of chartered accountants, SEBI wants to review, CAG wants to review, and SFIO wants to review. See, God alone knows. There are so many people who are calling for information and documents from chartered accountants. So our files are no longer just you convince a friend, peer reviewer, and your files are top class. Is no longer the norm of the day. Peer review, I think, is the very, very simple to handle exercise, as all of us know. Somebody who's close to you or somebody who's from your neighborhood comes and has a look at your files, and you all sit and go through the whole process of it's a friendly advisory mechanism more than something that is really correcting your system. QRB that way is a much better, stronger mechanism, because the time invested by QRB reviewers on reviewing your files and the amount of preparation that needs to come from our side when somebody from QRB is coming it's a totally different ball game. I'll try and talk about some of those things as I move forward with the presentation. So these are the three topics which have been assigned to me. SA 230, SA 315 and 330 are the three topics I'll be looking at. So possibly in the first hour or hour and 15 minutes or so, I'll be trying to have some discussion on documentation, because this is not something, I don't want to stand here like this is a classroom exercise. That's not what it is. So let's try and be as interactive as possible, and wherever you disagree with me, I'd be very happy if you can just tell me, no, this is not right, or something else, if you can give your inputs. And there are so many extremely experienced seniors and a lot of young blood also in the room who may have a totally different perspective. So if there are any views to be shared, please you can interrupt me. I don't want this to really be a monologue. So I'm very, very happy if I can be interrupted and some views are shared. And we should try and keep this interactive. Otherwise, a post-noon session on auditing standards is seriously a bad idea. So I think unless there is some energy in the room, it's in quick time I'll have all of you fast asleep otherwise. So let's try and deliberate on some of these and some of the practical problems we may face, or some of the situations that we may have in our own offices. If you can share some insights, that'd be great. So I'll try and give some practical inputs, but nevertheless, since the topic is institute published theoretical material, I wouldn't be doing justice if I don't cover what is there in the standard also. So I'll try and structure it into two parts. One part where I will talk pure theory about what institute says, and because most of us or many of us would have read these standards a long time ago, and we really wouldn't be remembering what is written there. We know what we are doing, but what is exactly written in the institute material, which also has undergone so much of change. It's because I was presenting a paper today that I realized that the SA 230's revised implementation guide has come out in December 2018. Otherwise, probably I would have seen it much later. when you're presenting at a seminar, you're always ensuring that you're preparing with the latest available material, and so December 3rd or 5th or so, a new institute publication has come, and there are a few changes in the checklists, etc., which are good. I mean, these are a lot of effort has gone into preparing these, and many of us who may have been involved in helping ICA with bringing out publications, we know that a lot of effort goes in, and many a time we wonder, even when we sit in those committees, whether is somebody actually going to read all this. This is a question which sometimes comes up. But nevertheless, we must give all credit to ICA for taking a lot of pain, and now it's up to us to ensure that we derive the benefit out of all the publications which are there, many of which require a lot of improvement. I'm sure we all agree on that. But how will it improve unless we actually read it and flag issues and point out, and that's how documents get better. So it's important for all of us to also actually be reading the publications of ICA, at least in areas which are important from an audit perspective, and also equally important that we drive the point home to our audit team that it is extremely important today. Compliance of SA is also mandatory, so it is important that our audit team members, right down to the first year junior who's on an audit, they should be really thorough. They should learn anyway. They have it for their exams, and it is imperative that they have to learn it. So it would be, if we can insist on it from the time they join, give them some time window, 30 days, 60 days or so. They're youngsters, they'll pick up in quick time, and anyway most of these people are coming in after finishing their intermediate or IPCC and all that. So it's easy to get them to be up to date on all these standards. So if we can also have a mechanism where it is an organization culture that auditing standards are as important as accounting standards. It's a culture which has to be driven from the top, and it's something that we have also faced this. We would also take our accounting standards very seriously, but auditing standards were always, we felt, a little theoretical. We know how to audit and all of that. That's the way in which all our firms have worked, and we have our own methodology, which each one of us believes is the culture of the firm, and it's the way in which we do our work. But we must also keep in mind that because of all the regulators and all the requirements today, it is equally important that in addition to the culture of each of our working spaces and each of our working entities, we must also ensure that all of these are complied with and documented. Compliance of documentation is very, very, very important. So it's a documentation of compliance. So I'll get on with it and start with my first. So what is documentation? We all know what documentation is, and it's a record of audit work. So either we call it working papers or work papers. I know this sounds a little basic, and standing in a room full of experienced chartered accountants and doing a classroom reading of accounting standard, of auditing standards doesn't make sense, I know, but bear with me. I have to do justice to the part of refreshing all of you about what is actually contained in these essays. So this is what it is. It talks about the definition of documentation and of what is an audit file, and it says one or more folders. It includes storage in electronic form is also included in that, which would not have been when many of us in this room, when we were students. If you looked at that definition, then we would not have seen that electronic media may not have been there, particularly many of the senior members here. When the standards initially came into play, it spoke only about the hard copy or the files as we used to know it back then. But today, documentation as electronic media is also permissible. And what is an audit work paper? Very simple. What should it contain? The purpose, source, extent, timing, nature, conclusion. All of these need to be captured in an audit documentation paper, in a work paper. Every paper must contain some of these elements. I think I've shared my presentation, so I'll run through without really spending too much time on these slides. And what are the things that we should keep in mind while documentation is being done? There is the judgment, an analytical perspective, and they ensure that there is a conclusion in the paper also. You can't leave papers which are half-baked, and observations which are left half open. Sometimes it's typically something that happens in all our files. The juniors who are on the job will write some comment Sometimes their language skills are not good. So many a time we don't understand when we pick up the papers and we go through. We don't sometimes understand, what they have in mind and what they've actually written are two different things. It gives a very very different meaning to it altogether. So it's important that these papers are, every single work paper is reviewed by somebody who's adequately senior in the system, who can edit and ensure that what is captured is factually correct and conclusions are there, for no open statements of or queries, etc., which are half-baked and non-understandable, and evidence, of course. What are the nature and purposes of documentation? The evidence of auditor's basis for a conclusion is obviously the most important aspect of documentation, and the evidence that the audit was planned and performed in accordance with SA and applicable legal and regulatory requirements. Equally important. So our work papers must speak for themselves. That's the simple logic. Without us being in the room, our work papers are given and they review it, and the reviewer has to be satisfied. We shouldn't be sitting there and explaining. In fact, we've been through at least 3 or 4 QRB reviews and it's really tough, let me tell you, because QRB reviewers are handpicked people who are very experienced in all kinds of audits, and a team of 2 or 3 of them come. It's usually one firm which is given, or one person who's given. He brings one or two senior assistants to assist him in his job. So 2 or 3 very senior level partners are coming from firms which do a lot of hands-on work, and they come and sit in your office for 3 days reviewing one file, one client. That's what is us. It's generally what large listed companies, banks and all that, we've had to go through it for many of the audits that we have done, and they come at 3 full days. One file of one particular year, one audit can be really, really difficult unless we actually comply with all of this. Unlike the peer review mechanism where somebody who's close to you comes to your office for 2 days and reviews 30 files. You look at top 10 statutory, top 10 internal, top 10 tax audit, taxation, certification, all of that done in 2 days, and then it's more again an assistive mechanism rather than something that comes on strong, about our weaknesses. Whereas QRB is not like that. Very, very knowledgeable senior people are coming, and they are independent people who only tell us, leave your files here and we'll call you if needed. So there needs to be a partner available for them on intercom or on mobile, somewhere in the office should be available, and an office boy or some junior to just help them in taking the papers is all that they want. And then they sit with a file of, say, an ONGC or a State Bank of India or an NTPC or things like this, and then any kind of question can come. They question things, they ask you the rationale for it, they ask you where this paper is, they say, why is this not linked, I'm not able to, connect this paper to that, I'm not able to connect this note of yours to that, I'm not able to understand why you have written this statement, should it not have been like that? But these are all questions which they, 2-3 days they sit with our files, and then they send a 20-page draft of observations. They don't even discuss it many a time when they are at our office, because that's the way the mechanism works. Sometimes they do. Some of the QRB reviewers have done that. Had the patience to sit, understand, and amend and give only a crisp. But on 2 occasions we've had situations where they just compile all this, and whenever we meet them for lunch or dinner, we ensure that one of us or more of us are with them, and they make only small talk about everything that's going around in Kerala and weather and God's own country and all that. They're not really talking to you about the issues which are there in the audit. They have seen it all. We know they're seeing it because they're asking one of the assistants to help with this, help with that, get that paper on. So we know what's there. So we are so tense as to what is going to finally come out of this. We don't want any comment about the quality of our audit and all that. And then a very detailed draft will come. And then point by point we have to say, this is it, this is how it is, this is how we have verified, this is it. Touchwood, by God's grace, we've not had any comment after I think 4 major QRBs that have been completed. So far so good. very scared to make any comment and all that, because God knows what will happen in the next one. So that's the kind of, that is the way in which ICA wants us to document it. And from what I understand, NFRA is going to use the QRB mechanism for their reviews, what I'm told. I don't know, that's what MPV sir was telling me when he came to Cochin a couple of weeks back. He was saying that the QRB mechanism was so good, and NFRA knows that they are not able to, have the wherewithal to have another machinery for it, so they will be using the services of QRB and following the QRB model for the NFRA reviews, what he tells me. So he says it's good for the profession that they are going to bank on our knowledge, is his way of putting it. We were all very apprehensive. The moment we see anybody from the council and all that, we always ask them, come on, why NFRA? But as sir very rightly said, that's it's about, have we done our job well enough? If we did, would NFRA have actually come is a question that we all need to ask ourselves. The profession needs to ask one another that question, whether have we as an institute done enough. If we had done, and if our members had done that, then probably NFRA wouldn't have been there in the first place. But anyway, that's beyond us today. It's come, it's in place, and we'll have to live with it. All, many of our large clients and all of that, we need to be on our toes, and we'll be a little extremely worried about it also. So I'll come back to this. And the several others. So the first 2 points are the major, major intent of documentation, but there are several other purposes for audit documentation, as is mentioned in SA 230, assisting the engagement team, assisting members to do their job well, and record of matters of continuing significance, enabling conduct of quality control in accordance with SQC1, enabling conduct of external. Did we have a session on SQC1, or do we have it probably tomorrow also? No, it's not there. Okay. So that's again very, very important standard, and since it's outside my purview, I'm not going to get into SQC1, but that's something that again one topic which we must all be well versed in. What is objective? Sufficient and appropriate record of the base of the auditor's report, evidence that the audit was planned and performed in accordance with essays and applicable legal and regulatory requirements. So audit report is finally our end document. So all of this documentation that we do finally leads to that. So we need to be very, very sure that every sentence, every line that is there in our audit report is backed by adequate documentation, which many a time is not happening. We say that we have done inquiry, we have done inquiry, and many things are there, as per management representation, as per information explanations given to us. We twist all our languages when we write the audit report, and we say as per information and explanations given to us, and if there is nothing in our working papers, then we've had it. That's prima facie misconduct. Any line in our audit report where we say as per management responsibility on something, or as per explanations given and all that, and there is no such explanation there in our working paper, we've had it. So that's one area where we all need to tighten up, because we are many a time just carrying forward the same statements from earlier year. At some point we would have taken representation from the management, apart from what is contained in vague terms in our letter of representation. LOR has a lot of vague things, which a lot of sweeping comments will be there in that. But there are specific matters which we are stating in our audit report, and whether we are actually ensuring that our working papers carry that. We may have taken a representation 5 years ago, but tomorrow when there is a problem and when you dig into it, you're not able to locate it, or you don't know in which year's file it is, and also all continuing comments and all continuing statements that we make in our audit report, let us please be doubly sure to ensure that every year that there is a separate flagged area in our working sheet file saying audit report matters, and ensure that for every question, for every line, every statement, we have adequate backup papers, whether it is for review of our the audit report, or the annexure to audit report, or the IFC on which we report on. All of these, we are just sometimes smaller companies also, many a time we just assume, we're going to check all this. So IFC and all that we generally write and let it go, and if there is no documentation that we have reviewed the framework, then tomorrow we could be in very serious trouble. So point I'm trying to drive home is that this is serious business. let us by no means underestimate the importance of compliance of essay on documentation. We know documentation is important, and each one of us has our own methodology for documentation. I'm not saying that any of us are really being very, very lackadaisical and all. That's not the point I'm trying to say. We have our own way of doing it, our own methodology, our own checklists, our own audit program sheets in-house, which have been tweaked over time, and all of that we have. All of that we may be complying with. We may not be giving adequate attention sometimes to the requirements which are promulgated in the standard. So let's all try and come back to the to today's world, wherein compliance and documentation of the compliance is important. It is very, very important and very critical also, because multiple agencies are looking at it, and so when they look at our files, all of these files should be able to speak. I know I'm repeating some of these over and over again, but it's just to try and overemphasize the importance of the of the matter on discussion here. Now, how much is a question? This is always a question. Many a time, even when we are on audits and all that, if we have a discussion like this in my office, and I talk to our team and I talk to our office, all of them, you need to document and all that. Next time I see, instead of 2 box files, there will be 5 box files. Because they are worried. Now, what will, let's not take a chance. So let's just take everything under the sun. Let's put it into our file. There will be a lot of photocopies, lot of unwanted printouts, lot of large agreements which are really make no sense for it to get into our file and all of that. By the end of the audit, if there is no pep-up meeting, there will be 2 box files. If there is a strong pep-up meeting, there will be 5 files, 6 files. This happens. I'm sure many of us here would have seen that happen in our offices. But then the suddenly team becomes very worried. You say, oh, tomorrow there will be a problem, QRB will come, SEBI is looking at it, NFRA is coming, why take a chance, let's just put everything into a file. But that's counterproductive. That's dangerous also many a time. Keeping all these unwanted papers, the same item we would have done an interim audit up to December, whole ledger of repairs and maintenance, print out with all the ticks and all that will be kept. Then you go back in March, you have taken another printout. When you take that printout, the figures there and this one have changed, some entries have come. Finally, box file will have 3 different printouts of repairs and maintenance. But these are things which happen, over documentation of all of these. Now, do we even need to keep printouts of these ledgers? It's a question we need to ask. If there is something, some very large, major, exceptional transaction on which you need to maintain a copy of that, then fine. If there is some narration which you want captured in your file, you keep it. But today, we live in an SAP environment and all that. What narration are we talking about anyway? There will be nothing. Absolutely nothing. A printout of a ledger means today nothing. You can't understand anything by seeing one of these ERP-based ledger printouts. Hardly any text matter on it. There will be some number, some code, some bracket and all of that, and then there will be one figure. And that too, sometimes you'll see that it's credit on the left and debit on the right and all that in some of the ERP softwares which are from other countries and all that. Even we get confused looking at it. So tomorrow, someone else is going to come and look at all these files. They are only going to get further confused. So how much is a very critical question, and there is no theoretical answer to that. It's case-to-case basis. We'll have to look at it. How much in one file in one client will be different from another client. In the case of a bank, it may be one. In the case of something else, right now, last 3 years, we've been the consolidating central auditors of State Bank of India. And a large chunk of our time we've been spending in Mumbai for that. And how much, in SBI, how much can you document if you look at it? There is simply overload of information from all sides. You can fill up this entire building with working papers, and still it may not be enough. That is the quantum of important issues and matters which are going on in an organization like that. So what do? There has to be some mechanism in place. So that may differ from one organization to the next. So you can't really say that, okay, only these things need to be kept in your file. But a message has to go from the top as to what is critical. In that specific audit that you do, what is critical? In statutory audit of a bank, what is needed in a file? Of a manufacturing company, what should go into a file? For a service company, what should go into a file? Internal audit. Internal audit documentation is the worst. Again, I'm sure most of us would agree. Many of the internal audit files, if you look at it, there will be 3-4 different copies of the drafts. Draft audit report, stage 1, stage 2, stage 3 and all that. How did you get this point? That I have my own mechanism. I either found out from somebody, spoke to somebody, checked something. So different ways in which very good issues are there. Very good issues, very good exceptions which are right, appreciated by the audit committee, our presentations, everybody gives a lot of applause to that. But tomorrow some reviewer comes and looks at our file. Where did this point come from? The file is not speaking. We are facing this. After every major audit, many listed company internal audits that we do, we sit with the team and excellent issues are coming out. By no means will I say that I am worried about the quality of the team or quality of issues raised, but I am extremely worried about what papers do I have to substantiate the issues which they are talking about. So this is a problem. So this is something we need to very closely address. I'm again not getting into the SIAs here. There are standards on internal audit also for many of these. Maybe some of them, if time permits, on documentation or risk and all that. If time permits, I'll quickly run through, because those are also important from a standards perspective. So I'll just quickly, slides are there, printouts are there. I'm not going to read this, but just what the standard says about how much is this is there in my next 2-3 slides, and it's basically the point here is that this, what it should finally do is that evidence related to the work we have done should all be captured. Work which we have done should be summarized well. Our working notes have to be there. External printouts and external ledger copies and agreements and all that should be just summarized and summed up, and what we have seen out of it, and how we have performed the audit, how we have gone about the materiality, how we've gone about the sampling of that area, how is it that that procedure has been carried out. All of that need to be very effectively captured. In understandable language it needs to be captured. What are the exceptions we have seen, and how is it that we have, the basis for it, whether it is in consonance with the partner concerned or with the senior concerned, whether it is by following and adopting the principles of the standards on auditing, on sampling or materiality, or have we done beyond that. Many a time we do beyond that. We also know that we don't find adequate comfort by some of the auditing standards also, and we may need to do beyond that, because we there are suspicions of fraud or suspicions of exceptional transactions and all that. We may do 100% or 50% and all that. In many cases we all do that. So that should be documented, and it should be documented in such a manner as to why did you do beyond what the standard says should also be documented. So that should also be documented, because these are all critical. So the file should speak as to why we have done an area, why, how much is it that we have done, how much is it that we have retained in our files. All of this should be properly captured in our file, right? Are you all with me so far? It's okay. Now what is the hierarchy of the file? Now this lead schedule is a very critical document, and this is something which again which sometimes we don't properly put in enough time to ensure that our lead schedules are prepared. Lead schedule has to really connect our document. The trail should be there. It should go from our trial balance to the financial statements to the notes and all of that. So the schedule should track, and an audit trail should be able to be established through the lead schedules which are there. So there should be either numbering or coding, or we can come up with our own different methodologies for doing that, but ensure that there is a lead schedule, so that if you see a number, we should be able to link it to whichever page number is there in our file. Again, I can't tell you a exact methodology, because it will largely depend on the complexity of the client. But any figure you pick from your trial balance or from your financial statements, you must have a mechanism whereby, looking at that lead scheduled copy, you are able to link it to page number 32 of your working sheet file, or page number 64 of your part 2 of your working sheet file, or something has to be there. Otherwise, nobody will be able to. As I told you, you are supposed to exit the room when the QRB person is sitting there. So, how is it that he or she will be able to link it to a number unless it's there? They will just say that no, none of this, I'm not able to do anything here. Your entire thing is a one big mess, will be the conclusion. So that's something, a little bit of time, we need to invest time in this. Our team needs to invest some time in this to prepare a lead schedule through which all the main numbers and all your major notes and all the figures in the notes, all the comments that you have made, all of that needs to lead to your audit working papers. And we all know that from this year it's going to be more difficult. All major observations we see is now going to be part of our audit report. Frankly, we have no idea how we are going to go about it next year. Seriously, a lot of discussion needs to happen, and a practical view needs to be taken as to what needs to be reported and all that. And obviously, a lot of discussion has already been generated, but we are really looking for some advice and guidance on that. And there are so many issues which are there. You take a large bank or a large organization, there are so many issues. We audit Air India, for instance. Right now we are auditing Air India. Audit report itself runs into pages and pages. There are so many problems in Air India. So audit report already, either as a disclaimer or a qualification, or already has so many things. And now you say that in addition to this, all the other key audit observations also you need to write. How many pages will we write? State Bank of India. What do you do? We know that there are at least 200, 300, 400 major problematic accounts. We know it. It's either in SMA2 or it is in slipping, or some bank has given some moratorium, or they've kept it in cold storage, or some special dispensation has been given case by case. Case by case RBI has given dispensation. Okay, instead of 4,000 crore you need to provide only 1,000 crore. Or this 6,000 crores which should have been provided, we give you another 6 quarters or 8 quarters. If we start writing, and each of these are material. Each of these are very large organizations which the whole country knows. Some problem happens, it'll be right on the front page. Those kind of organizations are the large accounts in SBI, obviously. What do? Write 20, 30 pages about like an LFAR report. The audit report will be like an LFAR finally, with all of these comments. So it's a challenge which we are all going to face. SBI, Air India, okay, larger government organizations we can take a call. But what about our regular audits that we do? It's coming for every entity over a staggered period of time. We will see that every single audit we are going to have to report about our major, so there will be a points for discussion that we have. After every audit we go through a points for discussion. 10, 15 major points are there, we give our disposal, and then we discuss with the management, discuss with the audit committee, and we close it. Now if we are to write all that in audit report, it becomes a totally different ballgame. So the level of documentation for our major issues also needs to be tightened and strengthened in the line of the revised audit report also. I'm just bringing that also out here. Other things we know, subschedules, obviously all our papers already have subschedules. Lead schedule is one thing which may be missing. Variance, analytics, etc. are things we do, but which we sometimes don't document. Many a time, variance and analytics is in the head of the signing partner or the senior. He or she just looks at it and he says, this I know. This has happened because of this reason. This has happened because of this. I know, I've already discussed. Or I was there at that audit committee or board where this has happened, and that's the reason. So you show us the number, we know why something has gone up or gone down and all that. But is our file speaking? Again, we need to understand that. So variance and our analysis side also should be very, very critically documented. Issues, memorandums, checklists, correspondence, all of that. Checklists and all that, I'm sure all of us have our own checklists. We can't do audits unless we have some kind of a program sheet or checklist. But if we think we need to improve, then we need to work on it further. Referencing, again, very, very important. I don't need to tell you what referencing is. We already spoke about the lead schedule and all that. So referencing is the activity through which the schedules are connecting, or the trial balance and the financials and everything is connecting to our working papers. This is the process. Redundant papers, unnecessary material, already I've told you, whatever is not necessary, case to case basis, we need to look at it. Even if our juniors come with a pile of papers, we must ensure that it is all unnecessary papers which needn't form part of our documentation should be shredded or should be destroyed and disposed. And it should be done as part of our documentation exercise, not after we get some notice from somebody to file or to submit our papers and all. That's not when we dispose of unwanted papers. So it should be done as part of our systematic exercise. Yeah, time removal is only permitted but encouraged during audit and during file assembly, but not after notice. Yeah. Audit notebook versus audit documentation, I'm not really getting into all that. And what is our duty? We all know what our duty is. Filing, keeping the papers, the checklist, and over a period of 7 years we need to maintain our files. We all know all of that, but ensure that our duty to the extent that is expected is done well. Each layer of hierarchy has a different duty. Juniors have a duty, the seniors have a duty, the partners have a duty. So we cannot blame one for the file is not good. You can't say that no, it's not my fault, it's that junior's fault. Or junior cannot say this partner when he finalizes my file is good, when that partner finalizes it needn't be so good and all that. So that cannot be the case. There needs to be a uniform standard in which all of us do that, and that cannot be based on an individual who's finalizing and all that. So. And yes, matters arising after the date of the audit report, obviously very, very critical to the audit report, though it happens subsequent events and all that. The documentation for that is an added more serious, particularly because it has happened after that, and how is it that we have we have to maintain our papers on that. I'm not really getting into that again. Ownership of audit documentation, we all know that. Retention period, again, SA 230 talks about 7 years. Just in case some of you have forgotten, please refresh. It's a 7-year period. And now before I move on to my next standard, which is why I was actually trying to rush through this and finish, I just thought I'll share something that we have done for the purpose of QRB. Obviously, I'm sorry I'm not able to print and share this material with you, but I'll just show you what we have done. I've obviously taken out the name of the client and all. This was for one of our banks, just to show you how elaborate this mechanism is. Many of you here, if you have not been subjected to the QRB or so there are a lot of questions which are asked, and a lot is expected from our working papers when it comes to compliance of this. Now, how much of this is being done is a question we need to ask, and I'm not saying that for every file we need to ensure that it is QRB ready and all that. We need to do that. But this is a good template for us to actually sit down and have a relook at it. We can edit, but as a starting point, this is good. Let's not try and address all of these questions in all of our working papers and all of that, but key questions, and let me tell you, at least 70 to 80% of these would be relevant for almost all our audits that we do, small and medium. Very small, fine, let's look at that separately, or for tax audits of firms and all of that. And I'm not looking at very small entities and all that, but for most of us here who are into corporate audits of some size, be it medium and large and very large and all that, it would make a lot of sense for us to have a proper documentation system in place for compliance with if a QRB comes in. And even tomorrow we don't know. It could be today we say NFRA is for very large organizations and all of that, but we don't know where it's going. They find that to be very, very very structured, and the government sees a lot of value in NFRA, and tomorrow they say that the entire mechanism of review of chartered accountants is going to be with NFRA, forget listed and all that, anything and everything. So somebody from the NFRA team can walk into any of our offices and look at any file. It's a possibility, definitely a possibility. You cannot stop that, or you cannot wait for that to happen for us to change. Now that we know that as a first step, that the powers have been taken away from the institute, and a much more aggressive form of disciplining is coming into place, let us start the change right now. because we can't change overnight. We really can't, from tomorrow we change everything that's going on in our office and our documentation. It doesn't work like that. It's going to take 2-3 years for our offices also to settle down to the change, for us to first understand and comprehend, and for us to push the change down, and for our team to start, and for our clients to be matured enough to do that. There are all kinds of clients we have. SBI, Air India and all that will have their own accounting department. Most of us here are SME practitioners. There are many cases where balance sheets are still being prepared by auditors, and we know that. We have traditional clients, many of our old clients who've been with us when we were small, they were big. Today we may be slightly bigger, but they are emotionally much more important to us than any of these larger audits. And we all have large number of such clients. So what do we do for those clients also? Wherein everything is our responsibility. They are entirely banking on us. There will be an accountant there, but beyond that, they don't even know if they are on a profit or loss until we finally tell them. We all have clients like that. Even in such cases, let's be sure, and I'm talking about companies which have grown and have turnover which is in hundreds of crores. We actually have clients like that, 200 crore, 300 crore companies and all that, wherein the accounts department is not strong enough, and somewhere they don't want the accounts department to be strong enough also. So then what do? Constantly we can push the management and tell them and all, they're like, we're comfortable. We've survived 50 years with this model. So let's not have a very, very strong, you're all there now, why are we worried? We are safe as long as all of you are there. That kind of trust which they repose in us adds more pressure on us. Right? I think you all agree, right? We all have such clients also. So even in the case of such clients, we must ensure that our files speak a different language from what we may actually be doing. It should reflect what the institute is looking at. We cannot really say, I'm again being very candid because this is a closed forum of all of us are professionals. We are not talking to students here. So it does happen. There are cases where we may have to help them in stock valuation, or we may have to help them in preparation of financial statements and all of that. So sometimes we actually see that our students document that. That cannot be documented also. Right? We are the auditor. So the auditor is the auditor. And we are only, at times stepping into the shoes of the management only to help them and aid them and ensure that it is done in a proper and systematic manner. Not that we are trying to tweak anything there, but sometimes we feel that the accountant or the finance team there is not strong enough. So we are aiding them sometimes by strengthening them. And on top of that, we are going to do their audit also. So sometimes we wear two hats. These are things which we must be aware of and ensure that during the course of documentation, ensure that what is documented is critical, which again brings me back to that earlier question about how much important that we document the relevant, the important, the critical audit documentation alone. Everything else that we do, all the other larger advice that we may be giving our clients is all from a macro perspective. So let me just next 10 minutes quickly run through some of these questions, so that there are 4 parts to it. So the first part has about 30-40 questions, and I'll just quickly run through some of them. Has the firm established and maintained a system of quality control? SA 220. Then we've written the whole story. How is it done? The engagement processing firm was established and maintained SQC. One, I'm just sharing what we had shared with the QR, which are directly overseen by the firm senior managing partner and other partners who are vested with ultimate responsibility. The senior managing partner designate and other senior partners not as involved in the assignment for the review of quality and performance of any assignments as per laid down norms. The quality control systems are reviewed and revised as may be considered necessary from time to time. The firm considered that quality is more important than the commercial consideration, and the quality systems would not be compromised with reference to the compensation agreed for the assignment. Now, you write a comment like this. You must also have something in your working paper to substantiate this. That is where it comes. Value systems, all of that we have put down here, but we have also said that it is directly overseen by the firm's managing partner and other partners who are vested with the ultimate this thing. Next thing they want to see is what are the comments or observations of the senior managing partner on for this particular. And you look at it and in the file you see that there is no note of your senior managing partner's comments, then their comment will come. That in part A, question number 1, it is mentioned that senior partner designate or senior managing partner has reviewed, however we find no documentation to substantiate the same. This is how they will write. That's one question. Similarly, it just goes on and on and on. There are a lot of questions. Do the personnel responsible for establishing and maintaining the firm system have an understanding? Yes, personnel required for establishing have understanding of SQC1. How? Now imagine 2-3 of us in this room. Imagine we are going together to sit in another CA's office for 3 full days, morning to night. 9:30 you start and they are there till about 7:38 in the evening. 1 hour lunch break. 2 or 3 trained professionals, very sound, good professionals. They come and look at one file for 3 days. Imagine the depth to which they need to be convinced about our documentation. So that is the kind of QRB mechanism which we have. It is an excellent mechanism. Sometimes I think it's a little overboard, frankly, but I don't really think anybody can find fault with the way in which the QRB is expecting us to document. Nobody can find fault because that's the level of in-depth documentation that they're looking at and they're reviewing it also. It's not that somebody comes and peripherally spends 1 hour on a file and goes. It's not like that. They're spending 20 hours or 25 hours they have to spend on a file. There is some timesheet and all that which I've seen them write. I haven't personally gone to perform any QRB. I've only been at the other end where I've had to sit and show them the files and be tense about what is going to be written about my files. Now that's the only thing that I've had to go through. But it's a harrowing experience. Each time something is called for and something is asked for and that paper, this paper, and they'll be asking the assistants to bring it. They will not be asking the partners. So that's the other problem also. Has the firm complied with each requirement of standard on quality control? Then you write that. Are there particulars of circumstances that require firm to establish policies? Has the firm established and maintained a system of quality control? Look at that. You're just about SQC1 itself, look at the number of questions. Has the firm documented its policies and procedures? The leadership and responsibilities. What policies and procedures have been established to promote that quality is essential in performing engagements from SA 220? Then we are right. The firm considers that qualities are paramount. In our opinion, the QC policy is complying, is in force, and we write all of that. The commitment to quality is an important criteria. In story we write and nobody stops with the story. They don't want our stories. Nobody wants. You can write beautiful, you could have written a much larger story if you want. Nobody wants that. Fine, story is good. Show us the file. Where is this? How can we be sure that steps have been taken? So then all the training programs. Out of the training programs, that's what I'm saying. So they're looking at one file, but from that one file, they're able to look at the entire mechanism of how an office works. So it's not about just identifying something that's going wrong in that one file. Though that is the brief given, that they are not allowed to look at another file. Even if it is a sister concern and all that, they are not officially allowed to look at it. Of course, there is something we may, informally we would share that with them, that's different. But officially they have to restrict themselves. But from that they go all across. Now you say quality, then say okay, how quality? Through training program. What training programs? So every training program that has been done in the last 1 or 2-3 years, everything has to be shown. What training program? Who spoke? How competent is the person who has taken this? So it is some CA in our office with only 2 years experience and all that, and how do you say that he is experienced enough to talk to your team about the quality of your work? Does he have any prior audit experience with this client or another bank? These are the kind of questions which come as the follow-up draft. On every line they have their own views, and then we have to substantiate 3 times draft, reply, and finally there is some area of discomfort. They have to put all of that together and send it to the institute. That's how it gets closed. So again, as a relevant ethical requirements, again I'm not getting to that. Independence, again independence is we can write all the stories, but then they have to see everything. about the junior most person who's been involved in the work, all of that, from the deputation letter, they are ticking to see whether the independent statement is there for every single member of the team. And bank audit, you can imagine, there will be 50, 60 people who are involved in that. And something that happened 2 or 3 years ago, they will come and mark, and out of somewhere they will ask how many of these people are continuing in your office now. Obviously, about 20-30% of them will still be there. Articles, many would have gone. And just send somebody. They can interview that person. They can talk to that person also and ask, okay, how is it? What have you understood from this? Very friendly with our people. It's not like an interrogation, but those are the kind of powers with which they are coming into your office to review that one file. Assurance practices. So many questions on that. So client relationship and engagement with regards to accepting and continuing client relations, especially how does the firm ensure? So what is capable and competent, complies with relevant. There again the firm reviews the desirability of accepting or continuing an engagement after examining and satisfying, etc, etc, etc. So these are all the kind of questions which come. So I'll just, the part A I'll just run through, just the headings I'll run through, otherwise I'll end up taking up all the time. Now, human resources, how is it that it has been planned, how is it that it has been manned, what is the consultation mechanism that we have, we may be taking for a very major matters. We will also have our own policy to take appropriate consultation. We have legal advisors for major matters on accounting standards. We may be referring to Mr. Malagam or to Mr. Sarda or to people of that stature, or for a tax query we will be writing to Mr. Rajaratnam. And these are the ways in which we ensure that major issues are documented in our file for helping us in our conclusion. Sometimes the opinions which come will be different from our own view. We may decide to not go with the opinion which has come, in which case more documentation is needed. This is the opinion which is given by Rajaratnam sir, but we have not decided to follow it. That's another, we'll have to write up about that. We can't keep that paper under wraps. We've asked for it, it's on record, so why we've gone against it, or let us say for a bank, we may write to Naganathan sir, for instance, get his view on certain matters on bank. And if Naganathan sir has given one view and we have decided not to go with that view, it needs to be documented why we have taken a different view. Now, differences of opinion, again, how is it that has been resolved? There will be difference of opinion. Sometimes within the firm, there could be difference of opinion, which is what many of our points for discussion also are. Sometimes our people write a query, but we have taken a different view. My audit manager may have a view, my junior partner may have a view. As a senior partner, I may have a view. As a senior managing partner, it could be a totally different view. So why is it that this view has prevailed over that view? Should be documented. A note is given by the bank about a certain account and they have said that this need not be provided, but we have decided to provide it. So the file shows a note as to why it need not be provided, but decision is to provide it. The person reviewing should be happy that, see, we have provided something, but it doesn't work like that. You bank has told you this, and I don't see any paper over and above this from your side as to why you have gone against the bank. Is the way the reviewer will look at it. So that's the kind of documentation. So we need to question ourselves, we need to question our files. That's the point I'm trying to drive home here. Engagement, quality control, engagement, documentation. Just look at this. So that's about 36 questions in part A. Then we move to part B. I'll talk about this a little more since that's my next topic also. Audit planning and risk assessment. So many questions. I'll bring this up once again during that session. And there's materiality again. How is it that material? This is materiality is a very easy thing on paper, but I think we all know how difficult it is to document materiality. Is not easy. More importantly, to substantiate why, in our opinion, something is that this is the materiality, and so that's not easy. So we may have applied our own way for handling the materiality side in a practical level. But when it comes to documentation, it is very critical that we bring it down to the basis and bring it down to compliance with what they say wants. These are all things. As you can see, why I'm telling you this is because QRB is largely based on essays. You're seeing that. That is the reason why I'm bringing this out here. So essays, how important an essay is what is coming out. So compliance with essay is what QRB is looking at, and tomorrow that's what NFRA will look at, and tomorrow that is what SEBI or EOW or SFIO or anybody and everybody who looks at our files tomorrow, God forbid if there is a problem and our files are going to be reviewed, this is what is going to be our, this is what is going to put us in a spot. If a comment comes that the audit is not performed according to the standards of auditing prescribed by ICA, nobody can save us. No force can save us if this is going to be the conclusion of the reviewer. That the auditors, everything, they have done a good job and their judgment and everything is okay, and their methodology of review, everything is okay. However, the audit is not done in accordance with the essays prescribed by ICA. We have finished. So that is where it comes down to. So these are the kind of issues which we need to understand. We are talking about only about 8 or 10 essays during these 2 days. But there are so many today. I haven't counted now. Earlier it was easy to count for us because it was in numerical order, 1, 2, 3, 4 up to 20 and 30. Now it's all numbers coming from here and there. So 300, 315, 330, 540, 620. So numbers are coming from here and there. So I think most of us have lost count as to how many SQCs are there or how many essays are there. We don't know. As long as it was chronological, like a AS, we know because we know the numbers. It's going in a chronological order. Here we don't know how many are there. So it's important that we understand all the essays. It's important that we understand, that we understand about the existence of these essays, which itself many of us may not be aware of. The headings to start with, at least a brief summary of what it contains as the next stage, checklists as the third stage, and very detailed checklists are there. ICA itself has prescribed, and there are a lot of these books available. So many, there's pages and pages of checklists is what is available. You can look at that. The new implementation guide which has come out on SA 230, which has just been released. I don't know if a hard copy is available here. I don't think it is. I just quickly ran through the counter. I didn't see it, but it's anyway available online. So all the major essays, checklists are available in that. So that's a very good document to start with. And again, just running through 450 audit sampling and selective testing. Again, I'll just quickly run through the headings so that we don't miss out on anything major. The documentation side, 230. That's what we're talking about. The audit evidence side, again, very very critical. External confirmation and audit evidence and all that. It's we've seen it. We've seen that finally, whatever said and done, the auditors of Satyam, the problem that they ran into, irrespective of everything else. Finally, the disciplinary issues that your external confirmations are not proper or have not been obtained directly and all that. These are things which we were all supposed to know and which we were supposed to do, but unfortunately sometimes we end up believing or taking our clients, that's what happened there. Typically that's what has happened, where you relied on your client, they got the confirmation and passed it on, and it happened to be bogus. That's finally what the case has come to. Over and above that, there may be larger issues and all that, but this is where the firm and partners are found culpable. Now we know that direct confirmations have to be received by us. Because of that, everybody is insisting. But are we really getting it? Are we really getting it? Are we really ensuring that we are taking that extra leap in case we are not getting it? Are we talking to the bankers directly? Are we getting it? It's tomorrow a problem because we need it. And it's not just for any of these, all including your Nostro accounts or your Vostro accounts and your escrow accounts, and there are so many different types of accounts. All of these you need direct confirmations. Many a time it's really, really difficult. You have to write to audit committee, we have to write to the board and all that, and then that's when sometimes these things come. So I'm talking about very large for medium clients and all that. Many a case, I think we are also, we know what position we are put in. Sometimes there's a lot of pressure, board meeting is coming or a managing director is traveling. After all, this is a non-moving account, or this has been there for so many years. You signed last year, it's the same figure, so we'll get it for you. All these kind of explanations are typical for our small and medium clients. We all experience it, right? So what are we doing to ensure that our risk to that extent is mitigated is a question we need to ask. And is it being done seriously enough? Are we taking it seriously? Are we passing that message down to all the way down to our team members that these things are very, very serious, and as a partner I will not sign. It's my signature that is tomorrow going to put me in a spot because you have not insisted on getting this from your client. Is the message, are we sending that message to our audit team members? Is a question we need to ask ourselves. So that's audit evidence. And part C is on written representations. Again, very, very, very critical. Letter of representation, LOR, is a very important document, but how seriously are we taking it? Many a time I have seen that there is one standard letter of representation template, unfilled, which is just obtained before the board meeting, before we sign the audit report and all that, because it is part of our checklist of documents to be obtained before signing, it will be obtained. Some patchy comments will be there. There will be major things that have happened during the year which don't find a place in the LOR. For all the major issues discussed, have you obtained representations of management? For issues which require legal and or a statutory or an expert view, have you taken a legal opinion? Have you taken the view of another expert? Have we done enough to insulate ourselves from tomorrow a disciplinary proceeding which God forbid comes against us? Have we done that? Question we need to ask ourselves. Just getting a template letter of representation, that to the same letter of representation for all 100 clients that we audit, same thing. Is that the case? Don't we need to have customized LORs to start with, and then first customize it for each client, thereafter year on year ensure that whatever is critical issues are added on, especially with the new audit report format and all that. We are writing something but there is no representation on our file, and somebody comes and looks at it, and we could be in very serious trouble. So these are extremely serious things. Whether we are giving it that seriousness is something that, again, we need to ask ourselves this question, because our priorities are to finish the audit and move to the next audit. Whenever we try and do this in our office team meeting, my audit seniors will stand up and say, sir, you have told us that this audit is finishing tonight. Tomorrow morning you told us you report in Coimbatore or you go to Bombay. When am I supposed to sit and do all this, sir? You tell me. It's a question that we face. It's a practical problem. We need to address that. So what we have actually tried to do is to build it into this. You're given two options. Either if it's an audit where you don't have to sit too late, then you do at least once every 2-3 days, do late sitting and finish it. Otherwise, after every major audit, we've given 2 days time. It's an instruction given in our office that if an audit finishes on December 9th, that person cannot be sent anywhere till December 12th. So 10th and 11th, day and night you sit and you finish. 2 full days given to you. We can't afford more than that. A lot of work. The next client is waiting, the next audit is waiting to be commenced. So we can't give them 1 month to sit and document and all that. But I know that 2 days is too less, and but then that's all that we can afford at this point in time, and probably we'll see if we can try and push that. Larger clients, we try and possibly give them an extra day or so, and that's all that happens. But what I see is that's enough actually. Reasonably, if people are conscious about the requirements while doing the audit when they take it seriously enough, it's all right. I'm talking about a manual mode of documentation, right? We also have moved a bit now to automating it, and those only for some of our larger clients. We use a software called Pepilio for documentation, and those cases are looked at slightly differently. So I'm not going to talk about how we document in an automated space, because there, as and when a checklist something is added, you need to immediately scan the paper connected to that and scan it, and you attach it, and along with the checklist that document gets loaded. So you write your comment and you put the scanned paper there. So that's a great way. We are over the next couple of years trying to move everything into the automated space. pace, but then it's not easy again for practitioners like us. It's not very easy because one we are not really used to it. We are also comfortable with our touch and feel documentation. We still need to see our files as files and box files, and you turn it over and see the signatures and see the file and flaps and all that. It gives us that level of extra comfort, though SA 230 permits you to do it on storage device and all that. Somewhere if my senior comes and gives me a disk or a pen drive and says, sir, all requirements are complied, it's in this pen drive, and gives it to me, I don't get that comfort. That's there, and I have many partners in my firm who are way more senior than I am. So even at my level, if I don't get the comfort, my seniors don't even get half that comfort. So many of my younger partners are comfortable. People who are early 30s, late 20s, and all, they are quite comfortable. They are okay. They say, okay, I see this, and they give them that pen drive, we put it into the Papilio software, they see everything. It's all done, sir. Why waste? We don't need to take prints. They come and tell me we don't need to take prints. I'm like, okay, fine, you don't need to take prints. We'll slowly move to that. For now, we'll do this, but after everything, you please take prints also and keep our documentation. Somewhere I don't feel comfortable. Tomorrow somebody comes, or you have something, and some issue, software is backup went for a toss and all that you say, and there'll be no papers left. So till we are very comfortable, let's not do away with our paper files and all that. So we continue to, even for these large clients where we automated it, we still continue to ensure that our paper files are still maintained. Okay. Now fraud, I think we had a discussion about that this morning. Very, that's our fear actually, more than anything else. I think today that's the world we live in, where you're actually afraid to sign. Till a few years ago, we were all more comfortable in signing financial statements, but today we are all afraid. At that point, suddenly all kinds of added superstitions have come. Is it Rahu Kalam? Is it Tuesday and all that? We never used to think about all these earlier, but today these added things have also come because you're really worried, whether, okay, I really don't want to take a chance by signing it at a wrong time. So let me be very clear, we do all our prayers before we sign, which of course in our firm even otherwise we pray before we sign. But now it's also an extra fear that has propped up in all our minds that that I really can't, because it's that kind of world we live in, and sometimes we wonder whether our audit methodologies are sufficient enough to find out a fraud. A large organization, 2,000, 3,000, 5,000 crore company, we do the audit in say 3 weeks time and all that, because it's a listed company, it needs to be finished, and companies want their board meetings by April 20th, 25th, April 30th and all that, otherwise market will react badly and all. So in 3 weeks time we have to finish the whole audit. March 15th or 20th we start the audit, by April 20th or so we'll have to finish it and then do all the finalization and close out as board and all that. By April 30th we sign off. Whether in those 2-3 weeks of audit, do we have the wherewithal, do we have the audit methodology, mechanism for us to actually find out, and today everybody is expecting us to also. We may say true and fair and all of that, watchdog, bloodhound, all of that we can say in theory, but tomorrow there is a problem and there is a fraud. Today, we are the first set of people who are being, pulled up along with the management and auditors, hand in glove. Nobody is even willing to, get into the fact that we have done everything systematically, they're not bothered. They're like, oh, it's a fraud. Definitely auditors also involved. It's the way in which our profession is being perceived today. So that gives us that added fear factor also. So in a way it's good. It keeps us on our toes. It will ensure that our methodologies are improved and all that. And hopefully, it will also, our institute also will be able to drive that back in the respect which our profession once commanded. Hopefully that can all come back, and then last 8-10 years we are seeing the body language of the board has been changing. We know that when we sit in boards, body language is very different. Oh, you have seen it, auditors have seen it, then there's no problem. Today the body language is like, okay, auditors have seen it, but are you sure you've seen it? That kind of That's the way in which the auditors are being perceived by, particularly by some new gen independent directors and all that. That's the way they see it. So that's something we need to ensure that the credibility and reputation which our profession has, we need to constantly drive it home that we are actually giving it our best, and we are following all the all the requirements of law and the standards and doing the best that we can. Then of course audit report and how that is done, etc. That's part C. And finally part D, again that's largely about accounting standards and how the standards have been complied with. So since this is a bank, then many of these are not applicable is the way in which we would have written for many of these. But so these are 4 parts. This also has some 30 odd questions. So you see that there are about 100 odd questions which are being asked by the QRB reviewers, and not just being asked. And this is no checklist kind of thing where yes, no, not applicable, you tick and bring and all that. So sometimes we do that, right? Even for our own documentation, we need to document so many things, internal control questionnaire and all that. Sometimes for smaller companies, our audit teams will just before signing, they will just yes, no, not applicable, and all that. They just tick, 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 bring something to you and all that. We may also say, chalo, it's only for documentation, keep it. But that's not adequate anymore. It's being looked at very critically, and now with something like an NFRA coming up, we need to be really on our toes to ensure that our documentation is top class. Right? I wanted this to be a discussion, but I think I've been talking, and I was supposed to close the first part at 3:15. It's already past 3:15, so I think we'll take a break now, and some discussion on this also we can ideally have before I move on to the next topic. And I think by about 4:30 we'll plan to close. That should be the time, right? So we'll take a 10-minute break now. Right, sir. Thank you. So welcome back, friends. Can I get started? Okay, so the next segment, over the next 45-50 odd minutes, what we'll try and do is discuss about 2 more standards which are related to risk. One is identifying and assessing the risk of material misstatement through understanding the entity and its environment, which is 315, and 330 is the auditor's response to that. But I just thought before that, I'll just, because again to just refresh on what is risk, I'll just run through in about a quick 5, 8, 10 minutes on what really is risk and risk assessment, so that it throws a clearer picture. So what is risk, what are the types of risk and elements of risk, etc. I'll run through, and what really is risk. Sometimes this is a question which is baffling us. Before we talk about risk assessment, we talk about risk mitigation, we talk about risk management and all that. But how many of us have actually fully understood and grasped what is risk? And is risk what it is in a mathematical formulae, or is it a risk of auditor's perception of risk, or the client's appetite for risk, or the auditor's appetite for risk and the client's perception of risk? So sometimes when we sit in these boardrooms and have these discussions on risk management and risk mitigation and all that, these discussions sometimes just go on for hours and hours and hours, because somewhere we are not able to find a middle path as to what really is. We've done many assignments, consulting assignments, where companies have entrusted us to do risk management studies and all that, and we come out with these documents, and while we make the presentation, sometimes we think this is a very important major thing, and they are like, oh, this is okay. This we don't see as a problem. We're like, no, this is your biggest risk. Like, no, this is not a risk. So this is the problem with risk. I think that's something that we need to be very clear about and understand, that risk is it's in the mind, it's a perspective, it's a perception. We may not entirely agree with the management or with a third party who may come again to review. Their perception may be different. But what is most important is our own perception of risk. What we think is risk is what we need to be very clear about. So what is risk? Definition is very clear. Probability that there is a threat, probability that there are vulnerability, and the potential impact. So forget the maths formula there for now, but these 3 aspects should definitely be there. And the types of risks we all know different if you just look at it broadly across 5 or 6 segments. In HR, there are a few. In finance, the integrity, the operations, strategic, information technology, accounting and reporting, and these things will change. Again, the risk. A simple case, let me tell you. In Cochin, one of our large companies is V-Guard. And in the case of V-Guard, the promoter is a gentleman called Kochosef Chitlapalli, who is a philanthropist and an activist. Now, he at times comes up with certain social causes which are very close to him, and he is very passionate about it when he is in it. So sometimes we say that, you are a chairman of this group, representing the group as the chairman. Now you are also an activist. So for the organization, with you taking up activism of certain matter, which may possibly go against the government or against the norms, that is a risk. Long discussions and deliberations have happened about the risk of promoters' activism. That is also a risk. So similarly, for every sector, every segment, there are different types of risk. Understanding and assessing the risk and the impact of these risks is most important. So assessment of risk should be seen from a very, 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 bird's eye view, macro, independent perspective. We must just sit outside from there, but be fully involved in what they do and understand what the risks are. We cannot really go with a template. There are a lot of templates, a lot of checklists which we follow, which we give our people in our team and all of that. But many a time the biggest of risks of the organization are missed if you just go with the checklist. So that's where the trained and experienced minds, and sometimes young minds with a different perspective, all these are very, very, very critical in assessing and understanding what are the type of risks. Those are internal risks. Now there are external risks, as we know, catastrophic environment. We faced it in large quantums. We faced it in Kerala over the last few months. We see that many people are rendered homeless. Many companies have lost their godowns. Never realized that Kerala was such a grossly underinsured state till these floods wreaked havoc. People are completely out of livelihoods and all of that. One flood hits you and the state had gone for a toss, and rebuild is happening now, but huge risk. And there are several triggers for it. There are internal triggers, there are external triggers. Again, I'm just using these slides to connect us back to the main slides. I will come back to SA 315, but before that, why I thought I must give an overview is just to get the whole mood set for appreciating what these standards are. Otherwise, we'll somehow think that risk and all that, okay, that's something which is just theory, is how certain people will see it. So I don't want that to happen. It should be, let's all be in sync in this, because it's very, very important. As sir was telling me, it's something that, something that is of great interest for all of us. It's something that is, where we really need to learn more. Documentation is something that we have learned and we have done. And we know it, but it's just that we are not doing it. That's documentation for us. Risk is not like that. Though the term is known to us, how many of us actually use risk assessment as a methodology for audit? We use risk assessment, to document everything after the audit is over, just for peer review purpose or for QRB purpose. All our risk mitigation templates and checklists we fill and keep is what we do. But are we using risk as a trigger, as a method for doing our audit? Risk-based audit, as we call it, are we actually doing it? It's equally important in statutory or internal or tax audit or any audit that we are doing. A risk-based approach is something which can give a totally different angle, a different perspective, and that's very, very, very critical. Simply because today the biggest fear for all of us should be the risk of fraud. I'm not getting into it because that has been handled in great detail. Today, as an auditor, our single biggest worry is not whether we missed adding a line here or missed a comma or a full stop or something in the audit report. And that's not our fear anymore. Earlier, we used to be worried about that kind of minute disclosure going wrong. Some notice may come from ROC and all that. Today, that's fine. Today also notice will come, but we can reply and we can have it solved and all that. But a risk of fraud in a corporate and the kind of action that is being initiated against the auditors when there is a fraud is what worries us more. And how do we, what is the starting point for us to catch a fraud or to detect a fraud? Once a fraud has happened, then suddenly it all seems very obvious. But till such time, where are the triggers coming from? Triggers are risk triggers. There are internal risk triggers, there are external risk triggers. Are we doing enough so that the triggers are being captured by our audit team? Are we doing enough such that wherever there are triggers, are we actually acting on it? Are we building it into our audit program? Is our audit methodology based on the risks identified? Are we fine-tuning our audit samples, the audit materiality? Everything is connected to risk. So risk as a concept, have we appreciated it and understood this as something that is very, very important from an audit perspective? Is the question we need to ask ourselves. And if that is, then the rest of it we can appreciate it better. But if we don't stay connected to that, then a standard will just be a standard. There are a lot of essays, so this will just be another one for us. That's not how we should see it. Essay 315 particularly is very, very, very important. And for that, we must first understand risk and understand how we address risk. Only then can we appreciate what is the risk of misstatement. So, internal risk trigger, external risk trigger. I can share these slides also. I've not put it up along with this. The determining the risk appetite, etc. and analysis, assessment, management and monitoring. 3-step approach. Again, I'll just quickly run through these because these are just to get to the point. Before that, the preliminary steps in risk assessment, I'll just quickly take you through that because this is, again, it should form part of our audit planning. As part of our audit planning methodology, that's where risk assessment comes. So the risk assessment is not something that comes in during the audit or a checklist that needs to be filled after the audit is over. Definitely not. This is where it begins. And I think all of us would unanimously agree that an audit well done is an audit which is planned well. Wherever the audit planning is being done well, the execution is most likely going to be done well. Every audit of ours where we have had some issues in terms of quality or in terms of the proper skepticism has not been applied by the team, or in-depth verification has not happened, or documentation has not happened, or there has been over audit or under audit and all that. When we finally look at all of these things, when we finalize, we always link it back to poor audit planning. So audit planning is the start point, and for that, that's where risk assessment comes in. So ensure that for all of us, practically in our audit planning stage, the initial meeting with our audit team, initial meeting with our clients, initial meeting where we all sit together and discuss our audit methodologies and what area needs to be looked at what depth, please ensure that risk assessment is considered at that stage. And how do we do that? By obtaining knowledge of the business, establishing audit objective, researching the background of audited area. These are all things that we know. No lecture is needed on how this needs to be done. We know it. But are we doing it at that stage, identifying it, identifying the risk area, and then ensuring that there is a customized risk audit questionnaire for that risk area. That's simply put, that's how risk-based auditing is done. And these are the processes. Once you understand it, then you identify the risk, then you assess the controls, and then the in-depth verification, substantive compliance, etc., fieldwork verification by our teams. Right, so I'll just quickly go through. I don't need to get into all of this. So I'll move back to my primary presentation on 315. Now, what is this standard? Broken this down into 11 steps, what the standard tells us. Objective, definition, requirements, entities, environment, entities, internal control, risk process, control activity, identifying risk of material misstatement, risks that require special audit consideration, revision of risk assessment and documentation. These are the 11 steps which the standard talks about. Again, I'll just quickly run through what each of these is, what theory is written in the essay, and I'll again, for the same QRB bank one filled up checklist also, I'll just quickly run through so that we get some understanding on on what it is and how we do it, and certainly offers a lot of scope for improvement. We are also learning, we are also understanding risk as an audit methodology, risk as an audit mitigation tool is something which is slowly getting into our DNA. This is not something which was all our audit methodologies, particularly for firms which have been around for some time and where we have our own method of our program sheets and our checklists are all based on conventional traditional audit approach and not based on risk-based audit approach. So we are changing both for statutory and in internal audit, particularly in a very, very significant manner. We have moved on to that. Banks also we are seeing now, the entire RBI methodology is based on the risk-based approach. So objective, as all of us know, is to identify and assess the risk of material misstatement. And what are the definitions? These are the 4 or 5 definitions which are mentioned in the standard. What is an assertion, what is a business risk, what is internal control, what is a risk assessment procedure, and what are significant risks has been defined in the standard. What are the requirements? Risk assessment procedure is only a basis to identify and assess the risk, consider relevant information, engagement partner to consider relevant information from other engagements, and if information from previous audit experience is considered, auditor should determine if there are any changes. So this is requirements are all fairly simple, what the standard says, again something we all know. Entity's environment, again the environment, the standard tells us how the entity's environment is to be looked at, the industry perspective, from an operations perspective, selection and application of entities accounting policy level, objective and strategies of related businesses, and finally the measurement and review of entities' financial performance. All of this looks very nice in boxes and on a slide, but this is very, very critical. Understanding the entity's environment is very, very, very critical. So how much of time have we invested in understanding that? Have we looked beyond the financial statement draft which has been prepared by them and which we are looking at, or which has been prepared by our people in some cases? Or are we getting into the business is what we must look at. We cannot say that we have looked at only the financial numbers, because a material misstatement in the financial numbers does not come only from some regrouping of numbers. That is not what the standard is envisaging. When you say risk of material misstatement, they are not only talking about rent, rates and taxes going into rent and capital becoming revenue or depreciation becoming amortization and all that. Okay, those are also misstatements in its own way, or those are also some degree of errors at best. That's not what you mean by a material misstatement. When you say misstatement, it's a clear case of something that has not been seen, something that has not been understood, something that has not come into our methodology, something that has not been factored into the way in which the audit itself has been conducted. So what is the risk of our audit not reflecting what it is, or what it should be, or what it ought to be? That is the risk that is being perceived here. That is why it is being connected to risk management and risk assessment and all that. Otherwise, why should we even look at risk assessment? Risk of material misstatement is only about some errors that happen. If that is what it is, we've had some discussion on this at another forum, where somebody said it is a risk of material misstatement, so why should you bother about the risk assessment and all that is a different ball game altogether. This is only about misstatements in the financials. Capital becomes a revenue, that's misstatement. So you just need to vouch your bills a little more, take a larger sample, and that risk is mitigated. That's not what is envisaged here. Let's be very clear. Doing 100% vouching and ensuring that all the entries are, capital is capital and revenue is revenue and current asset is current asset and current liability is current liability, and itself is not enough in what is SA 315's overall perspective. That's something that I want to be very clear here, because that needs to be understood. Though the caption of the essay could be a little confusing there. So entity environment, understanding and appreciating the environment, and thereafter understanding the risk in that environment is the key question. And once the environment is understood, we need to understand what are the control systems, right? Understanding the control systems. This is where the whole IFC framework comes into play, Today we are certifying. It's not about that one line in our Mao Karo, which later became Karo, about systems and processes being whatever internal controls are commensurate with size and nature and all. Those have all changed today. That one line reporting in about in your Karo is not what it is today. Today you have a report in itself. So what is it that you have done for that? Is there a framework? Does that organization have the framework? Is that framework in place, and has that framework been reviewed on an annual basis? Many large companies are giving assignments on a yearly basis. We are doing for many companies, including for many government companies and other large listed companies, review of IFC on an annual basis, so that the statutory auditor gets the comfort. So that is also being outsourced, and it's a huge affair. Cochin Shipyard is one of the largest yards in the country, and we do an annual IFC based review. Federal Bank, we had done that. So I'm just saying that this is something which is a very, very, very serious business as far as the organization is concerned, because the statutory auditor is not in a position many a time to actually go and review that. He doesn't have the time, and it's, according to the statutory auditor of many of these large companies, it is not our job. So they talk to the management and say that you get this certified by some other person, you have this reviewed by some other person, we'll place reliance on that. It's also an area of opportunity for us, something that we really, many a time we don't realize. Every one of these organizations, large companies, wherever, particularly some of the auditors are very, very clear that they will not comment on this unless there is an external certification on this, or an external review report, as we call it. We don't certify it, we only review it, and like an internal audit report, we do an IFC and we say that there is a framework in place, and that's how we conclude. Whole framework has been put in place, and match it, and wherever there are discrepancies, that will be, bring it out and say that there is nothing which is substantial. And if there are, we will report there are. So for that, this is the SA 315 is the guiding essay for the control over IFCs. So we must understand that this is a very, very serious, important standard, and one which we must study, A, from a theory side, B, from a practical angle, ensure that in all our major clients, it's for the kind of clients that we audit, we may not be in a position to tell them to get somebody else to do the IFC and all that. Already we are struggling to get the statutory audit fee. On top of that, you ask somebody else to do the IFC also, then, they will say, forget it, you don't certify. It's okay. We have clients like that, actually, I'm telling you. They say, this is your institute's requirement. Nah? We don't want it. You don't certify it. We're like, no, but it's mandatory. Then it's okay. Mandatory for you, right? Why have we bothered? This is the way in which many of the, I'm sure we all have many, many clients like that. They don't care. They say, this is what it is, this is what we'll pay you. You do this, and whatever regulations are changing, it's your headache. It's not my problem. I am doing my business. Everything else is your problem. So that's the way many of our clients are, and you can't change them, and you can only slowly try and educate them, but you can't change them. So onus is on us. As statutory auditor, we are taking that risk. So have we done enough to ensure that they have systems and procedures there? And if it is there, have we ensured that it is being documented adequately? It again, all of these revolve back to SA 230 again. Not enough that we are convinced that there are controls, but we have signed an audit report. It's a separate report in itself, forming part of the main report. So ensure that the control system documentation is done in a very, very systematic manner. Risk process also, we must understand it and clearly document it. I'm not reading that out. And what are the control activities? So again, it's all, these are the two words: risk, control, risk, control, risk assessment, risk mitigation. These 4 or 5 words which have been used so many times in this standard. You can read it many, many, many times, and you'll see these same words being used again and again. But again, the good thing is at least it's come back to a level where it's understandable. Again, during lunchtime I was having a chat with sir on this. it was earlier, the COSO model is what was being talked about, which is still there. If you look at the standards on internal audit, the SIA, I don't remember the number, I think some 12 or 13 or something is on risk management. There, that model is still there. They still follow the ERM model. Okay, fine, the SIAs are not mandatory yet, it's only recommendatory. So probably when it becomes mandatory, they may change it. But very, very, very detailed COSO framework, or along the lines of COSO, there is a framework there. And how many of us in profession have actually, many of us would have passed our CISA and DISA and all that, but how many of us have actually understood how to use the COSO framework for doing this? Is a question we need to ask ourselves. Probably very, very, very few. Some of them may be there, very people who have really gone into it in great detail. Otherwise, we've all only understood it from a bird's eye view, and I'm not too sure if I've really come across anyone who's actually implemented that framework on paper. They would have, but whether that's in their audit methodology, whether that has been integrated, I have my own doubts on that. So today, at least, it's understandable because we understand words like control, and we understand words like risk, and we understand these are things we can understand, and I think it's been simplified and actually made more practical to that extent. So while we say that many of these are yet to be fully ingrained in our system, but the fact is that at least some steps have been taken to simplify it for us to digest it better. Identifying and assessing the risk of material misstatements. See, after all of that, they finally come in point number, out of 11 segments in the standard, it's only when it reaches the 8th segment that they actually even talk about identifying the risk. And that's pretty simple. You say that at the financial statement level, and at the first level, and at the transaction level at the second level. So financial statement level is something we are all good at, because that's where our intelligence comes in. We sit with the balance sheet, which our seniors have done all the audit. It comes to us, we look at it, and we look at everything. NP is gone up, GP is gone up, percentages are not there, current asset is too high, stock as a proportion to this is not right, or this figure is too high, that figure is too low. Through our own experience, we can point a finger somewhere and there will be a mistake. That's something I think touchwood, over experience and time, most of us would have possibly been able to identify at least most of the financial statement level issues which are apparent from the face. If there is a problem, we can catch it. But transaction level is beyond us. How many of us in this room are actually sitting and doing the transaction audit? We don't do it. We would have done it at some point many years ago, but today do we do transaction audit? We don't. It's done by somebody who's operating 2 or 3 hierarchical levels below. A 20-year-old or a 22-year-old in the system is doing that, and all our reliance is on them. Finally, risk of financial misstatement. Can I
have a suggestion?
Yes, sir.
One of the things that we do is larger companies go through the journal entries passed on 31st of March, which is closing entries, and we arrive at a figure of materiality. Like a large company, anything more than 10 lakhs, we discount all the journal entries and re-watch them, although they would have been watched by Article 12.
Right.
Because these are the entries which will make a difference. So every audit we do that process, we go through that process. In fact, auditors go through the process of watching the journal entries.
That's excellent, sir. Excellent. I think we should. At one point we used to, but again here it happens at the audit manager level, and at the partner level, the last day entries are actually, we don't. It's no longer a part of our. But maybe you have a very valid point there.
You fix a materiality level,
right.
10 lakhs, 20 lakhs, or whatever. And then that will finally sort out, and then you have filters out, and then you probably have about 20 or 30 entries.
Major entries here.
Stock write-offs and things like that.
Right.
So those are the entries again are watched by the partners or managers or whatever.
Great. Yeah, that's a wonderful suggestion. I think something which all of us should certainly continue to do. That. We've all done that at some point at different stages. Somewhere down the line, many of these things get delegated. But as Sir very rightly said, some of the critical aspects, though delegated, need to be redone to ensure that that the quality is maintained, and we'll certainly take your suggestion on that, sir. Now, what are the risks that require special audit considerations? Auditor's opinion: if any of the identified risks is significant, the auditor has to obtain sector. Now, these are the following. The standard talks about a few very critical risks which need to be looked at, 6 in fact. The risk of fraud, which I've been talking about, and I'm sure we heard it all morning. Most significant risk is the risk of fraud. It relates to recent significant economic, accounting or other developments, including regulatory changes. Complexity of transactions, significant transactions with the related parties, again something very, very dangerous and close scrutiny. Tomorrow if there's a problem, it's the related party transactions which are being first scrutinized. Degree of subjectivity in measurement, and significant transactions outside the normal course. Fine. And accordingly we have to revise. There could be one review and one set of observations that come on our risk assessment, and we need to modify it accordingly based on, and accordingly modify our audit procedures once we have assessed the risk. And finally, documentation. I don't need to talk about it. That's already been spoken about in detail. So again, a quick checklist which I'll just run you through, which we have. Do we have time? Yeah. This is again for a bank, not a very big bank, but so this is what it looks like. The compliance of SA 315, and again, if it is a QRB environment, then all of these are being further scrutinized as to why, what. But this particular document was not for QRB. This is for our own internal documentation which we have done. Advances: what is the risk identified? What is the audit procedure? What is the result of testing, and what is the risk perception? So this is also based on these. Now for us, the review of the compliance of RBI norms is a problem in this particular bank, and we have given it a high, because not every bank takes every circular seriously. This is something which, this is a few years ago actually. Today's environment is slightly different, but this is for a very small bank, which we had done, not for any of the larger banks. And this was one place where there were some issues, and there were some, there in fact there were a few qualifications finally in the audit report also regarding non-compliance of certain RBI, etc. So we assessed that as high. There were some issues in the valuation principles which are being norms which are being applied in this particular case for the treasury. We've assessed that as high. That also finally warranted a qualification at the end, towards the end of the audit. And IBR was not too bad an issue. It was raised as medium, but again, it very, very detailed note had to be given in the accounts. IS systems, at that point there was a bit of a problem there. Deposits, liabilities, provisions, etc., not a problem. Cash was okay. Fixed asset low, income low. All others according to us major areas were low. So now we can't just write high and leave it at that, right? So when you identify an area as high, then what is the problem there? What is it? And then you carry it all the way and close it. These things need to be closed. Now if you look at my file for this year, you will be able to see from here it goes, the lead schedule will take you all the way to the audit report, which finally has a point. And in that audit report working paper, if you look at it, you will see in the draft that we put it in bracket that it is connected to this paper of the working sheet and this paper of the SA 315. That's all have to be connected. Otherwise, why have you qualified this? When somebody asks you why has this been qualified, then it goes back to the documents in one file, it goes back to the checklist in another, it goes back to, so there will be 3 lead schedules which lead to the final one, where all of these are interlinked and connected. So that's very, very important that standards like these are given its due. Many a time what happens is risk is something which we have our own way of doing our audit. What do we typically do? We go there, we get the take the trial balance, make the financial statements. Wherever the variances are high, we do more detail. Then certain months of cash vouching is done, or even the sampling, materiality, everything. It all happens in a certain manner in which it has been happening conventionally for many years. We've been doing the audit in a certain way. You do April, you do September, you do March, then bank reconciliation you check fully for March, you do. So there is a whole written down checklist is there, and you just follow the checklist and go. Now that has to change. That is why these standards are so important. It necessarily has to change. It's not that this is not a new concept. The risk and all that, these are, the standard has been there right from last 20-25 years at least. It has been there. But it's something where, when these standards were not mandatory, this was something we would just use it as some form of a documentation thing rather than as something that needs to be fully given its due. But today that's no longer the case. If there is going to be a violation and if there is going to be a problem, this is going to be questioned. Have you applied? We've actually sat with the CAG and they are understanding it better. RBI and the CAG are understanding risk-based approach because their audit methodologies have now fully been tuned to risk-based audit. So, and their people are new people and all of that. When they come in large organizations, they just talk about that. They're talking, this is it. So their checklist, program sheets, everything is different. When you are on a risk-based approach, everything is different. Now, internal audit is one place where we really need to change that. Let me just, since I'm talking about that, I'll just take you to that slide. Just presented it elsewhere. Standards on internal audit. This is enterprise risk management is SIA 13. Yeah, I'll just take you to those slides also because those are also interesting concepts. I'm not saying that just because the framework is a little difficult to comprehend doesn't mean that we shouldn't take the effort to not understand it, because there is a lot to learn from it, and that is also an institute prescribed standard, so we cannot ignore it as such. So this is the ERM model we just talked about. So when we talk about risk management and risk mitigation, etc., we must also understand what this framework is, and especially when we do internal audits, at this point, this is the standard. So we cannot say that we do not know. SIAs are not something that it's not something beyond the scope of auditors and all that. Definitely not. Tomorrow there is going to be a review of our internal audit file, and God forbid if there is a fraud and somebody is going to come and review your internal audit file, compliance of SA from a reviewer's angle is mandatory. ICA may not say it's mandatory at this stage, but ICA has prescribed 18 standards, and if there is going to be a problem and if your files do not speak, if we do not have a checklist and compliance of SIAs has not been ensured in our internal audits, we are in trouble. So please, while we are on risk, please let me also add that is also important. And this is the structure, this is what the ERM structure looks at. Is it readable from here? Yeah, there are 9 principles. I'm not really going to get into these slides because it's beyond the thing, and another 10 minutes I'll talk about SA 330 also. So, but before that, just to give a bird's eye view, there are 9 steps here. There are 4 phases in which ERM is done. There's phase 1, phase 2 is the network itself, 3 is risk profiling, and 4 is implementation. This is 2. It's a very, very, very detailed SIA. If you read it, it's a very interesting document to read, institute document. So let's, if you haven't seen it and if you've not read it, then I think it makes sense to actually understand that. Talks about risk mapping, talks about risk register. I'm not able, simply because of paucity of time, risk itself is it's a very, very long topic if you are to get into that mode. So I'm just throwing some of the concepts open here, not really getting into the whole, the risk methodologies and all that. But reading the standard could be interesting, and how that is being implemented also is there, and how it is to be reported. What are the the templates and all that. There is a lot of interesting material when it comes to this thing, how it is trained, how the software is to be used, and all of that. So while on that, this is also interesting actually. Since I spoke about 13, this is totally not in my purview of today's talk. 13, SIA 13 is risk, it's there, but 14 is also actually very interesting. So just read up about it, about how, because there are, the essays don't really talk about that in such detail, but the SIAs talk about audit in information technology. And today we have digital standards also. Digital standards board of ICA is also there, and digital standards are also there. So are we actually, are we up to date with all of these is a question we need to ask ourselves. Okay, I think with this I'll come to a close on SIA 315. I'm not too sure to what extent we've been able to fully understand and grasp, but my objective is just to to have an open thought on what this is and what needs to be done now. This is something which needs to be done on a case-to-case basis. Every client is different, every organization, every entity is different, so it has to be looked at with a lot of time needs to be invested in year one to ensure that the entire risks are properly understood and appreciated. And quickly, this is a very small standard, so this is just now that we have understood the risk, and now that we know what the risks are, and identified, assessed it, and taken steps either to mitigate it or control it and all that, what is our response to it? There are so many things out there now. What is expected out of an auditor is again a 12-step. There are 12 steps which are mentioned in the standard itself, but I'm not going to be spending much time on it. It's more theory, but nevertheless, since this is what the standard talks about, I'll just quickly run through what our approach to it should be, and how do we need to, what should be our way of finally attacking it once we see all of this. So what is the objective of this essay? To obtain sufficient appropriate audit evidence about the assess risk and design and implement appropriate responses. So is it our job, is a question we need to ask. There is a risk there. It is an organization's or an entity's risk. What is the auditor supposed to do? Is it our job to implement responses? Standard says we also need to be a part of that. That's the point here. Our job, especially, again, this needs to be seen from two perspectives. One in our role as the statutory auditor, one in our role as the internal auditor. Internal auditor's role is what is talked about in such great detail in SIS. So let's not mix up the two just because I brought those slides here. But here it's more from the auditor. When we say, we are talking about it from the perspective of auditing under any statute. So here we have a role, we have a responsibility, which is why we now have a report in itself. Are we expected to report? We are expected to report. If there are deficiencies in control systems, and if there are specific cases which require to be highlighted in the report, do we need to? We need to. Are we expected to give suggestions? Yes, if you want to. This is the difference now compared to the earlier time frame when there was just that one para where we wouldn't be writing much. But today we have a report all to ourselves to write about the risk and the control systems and the IFC and all that. We can write. There is a mandatory structure. We can go above and beyond. We've seen several cases where we've seen that, and in some of our own cases we have written. Though we don't write too much. As far as possible, we try and limit what we write, saying that there are certain things, some deficiencies have been noted, which has been pointed out to the audit committee and the board, and as informed, steps are being taken and to further strengthen and all. This is the language which we use typically. We don't bring out all of that because there's no mandatory requirement to list it out and all that at this stage. Moving forward next year, we may think differently with the new audit report format and all that. But yeah. Overall responses, design and implement the responses to the assessed risks. It's pretty straightforward. Procedures, again, it's something that we know. We spoke about it in the earlier also. Since I'm talking about 330 immediately after 315, I don't really think I should be reading out about procedures. We spoke about test of controls also. We know we spoke about controls and all of that. So all of that needs to be, we need to tighten our controls further. It's simple. When you know there is a risk, what is the auditor's response to it? Strengthen, do more, vouch more, increase the extent of checking, larger sample, set a different materiality level. So these are all things which we know and which we do, but obviously all of that is being listed here. Nature and extent of controls, again I'm not going to be reading that, it's there, I think copy is already there with you. Timings of control test the controls at frequent intervals or at such periodicity as the auditor may deem fit. Interim period review, that's something which is also to be looked at. If there is an issue and there is a risk and there is needs to be reviewed, don't wait for the year end. Always look at it in a broken period. If it's a listed company, definitely we'll have limited reviews on a quarterly basis, but even if it is unlisted, do an interim review and see whether these risks are being properly addressed and mitigated, so that by year end you have a better position on these things. And if audit evidence obtained in previous audits can be used, certainly yes. Certainly yes, it can be used and must be used, but nevertheless you must have a zero-based approach to when you are looking at it, and a re-review of it, the IT systems, the IT controls, effectiveness of the systems, the internal controls, and how robust they are, and whether the team is equipped, whether they have proper structure in place, whether there is a risk management and mitigation framework in place, people in place. All of these need to be looked at. And controls over significant risks. Again, this is very much similar to what we spoke about earlier. And the substantive procedures. This is very, very important. Finally, that's our job. That's what we are trained in. Our substantive procedures, how it is tuned to react to the risk, makes all the difference. We know there are risks. What is our single? Again, the standard is long and winding, and finally out of 12 points, when it comes to the 10th point is where they talk about what we really need to do. So, and it's something we all know. We all know that when there is a risk or a perceived risk, what should be the auditor's response? Could have been, the whole standard could have been written in 2 pages, because that's something that we all actually should be doing and know what we are doing. But it's good that they have given very elaborate definitions and a whole preamble to it, so that we can at least you can understand and appreciate the history of it better. Even if you don't read another essay and you read this in isolation, you can still understand what needs to be done. I'm sure that's why there is so much of literature revolving around this standard. But finally it all boils down to, this is where it starts. Point number 10 on substantive procedures is where it starts. So again, related to the financial statement level, how do we do it? Class of transaction level, how do we do it? How do we do it? How do we document it? And how do we take it forward? Once the substantive procedure is done, then the next point is the presentation and disclosure. So you do all of that, and then you come to your conclusions, and then your presentation and disclosure in the financials. What do you do? Notes given, footnote given, or do you refer it there? Is it all in the note, also in the director's report? Sometimes we insist on that as well, though it's beyond our purview. Many a time we recommend to the directors. We've given a note in the accounts, but please give a history about that in your director's report also. Better corporate governance, that there is a problem which is come as a footnote or a note or a footnote. That's also your note. A note to the financial statement is not the auditor's note. It's your note. But to have a better clarity, since director's report is a more you can write more in the director's report, it may make sense for you to give a little bit better disclosure for readers' understanding. And all of that is, sometimes these are all things which we advise our clients. So the adequacy and presentation disclosure, it comes there. And then what? They are not willing to disclose, then what do you do? That's the point. That's where it comes, it all boils down to, what do we do in our audit report if they are not willing to? Simple. For some strange reason, my slides have gone blank here. Is it there in the printout? Anyway, it's a very simple slide. It just says that in case they are not willing to, that's there, it's there here, but for some reason it didn't show up on the screen. That's fine. So, they are not willing to disclose. They are not willing to, you have a problem, you have a risk, you have a major issue, you tell them you want disclosure, they are not willing to, or they are not willing to disclose it in the way we want it, or they are not willing to account for whatever needs to be done as a result of it. If there is a financial impact, then what do you do? Finally, it all boils down to the one weapon that we have. What is that? A qualified opinion. Simple. disclaimer or a qualified opinion is like the ultimate weapon that we have. Use it if there is no other go. So that's what the standard says. It talks about various things, various ways, and then talks about procedures that we need to do and what extra we can do and how we can mitigate it and control it and all of that. But finally, the standard comes down to say what is finally the auditor's response. If it is curable, then cure it. If it can't be cured, then qualify it. Simple. That's something we do. That we know it and we do it. Nevertheless, the standard mandates us to do it. That's the importance of the standard. So it's mandatory. So we are tomorrow, if we don't qualify, but we've written all kinds of things and a note is there and we are uncomfortable and somebody critically reviews it and says, fine, you've disclosed everything, you have, the note says that there is a problem, directors have also agreed there is a problem, but you've done nothing about it. As auditor, you have neither provided for it, nor have you, made a mention of it, nor have you, there's not even an emphasis of matter or a qualification or a disclaimer. So then what has the auditor done? Are you agreeing with what the management is saying? Will be the question to us, obviously. That's something we all know. No rocket science in that. So that's pretty simple as far as that standard is concerned. It's just about ensuring that it's all disclosed correctly and that the auditor protects his interest is all that the standard says. So in short, I think this is it. If there is ideally, if there can be some interaction on any of these, that's great, or we can even discuss offline. I'm fine either way. So if there are no questions, can I close? Right. So thank you very much once again. Thanks to all the organizers and to SARC for giving me this opportunity, and thanks to all of you. You've been a very patient and wonderful audience. I look forward to meeting you all again. Thank you.
Thanks, Chetan sir, for your wonderful lecture. Now may I call upon Mr. Sriram on the stage, please, to present a small gift on behalf of SRCFICA as a sign of love and appreciation to our honorable speaker, C. Vivek Krishna Govind. Thank you so much, sir. We are eternally grateful to you. Dear delegates, thank you all. Let's all meet tomorrow for our secondary sessions. Have a great time again. Thank you all.